Can we do a little bit of discussion about essay 520 first before we start the writing practice, guys? Okay. Try to answer my questions, everyone. In analytical procedure, is analytical procedure a part of your further audit procedures as per essay 330? It is? Okay. Essay 330 prescribes you further audit procedure in which you have two audit procedures. One, test of control. Second, substantive audit procedure. There are two bifurcation of substantive audit procedure. One is your test of details and second one is substantive analytical procedure. So you are using analytical procedures over here to obtain sufficient and appropriate audit evidence, right? Do you use only financial information to do the audit of do your analytical procedure? No. So the whole idea of you using analytical procedure is you have to use the combination of financial and non-financial data in order to draw certain information from it of which you may not be previously aware of. What did I say? This is the sentence they are using in essay 520, that you are using certain information, information based on what analysis you did of financial and non-financial information, and the chances are you might not have gotten this information just by looking at the financial statement. So this is something extra you get when you do things like trend analysis, ratio analysis, reasonableness test, and structure modeling. These are the four techniques given in your syllabus for doing an analytical procedure. Right? Write down the question. While applying the substantive analytical procedure, what techniques can be used by a statutory auditor of the company to obtain sufficient and appropriate audit evidence? Ronan, are you here? Niray, are you doing 570? I think you did 570 very recently, Niray, right? If you have, I think you can skip this session. Don't waste your time over here. You can do something else.
Even we can do 580 tomorrow, ma'am. Even that hasn't been asked for
Ask for,
last
I
attempts.
think, yeah. We can. So we'll pick one standard, do it thoroughly from tomorrow. But okay. Question number 93. Today we are doing 520. Question number 93. While applying substantive analytical procedure, what techniques can be used by the stat auditors to obtain sufficient and appropriate audit evidence? Now think from P&L item point of view. Guys, look at me what I'm saying. Think from a P&L item point of view. I am talking about items like sales. I am talking about items like purchases. I'm also talking about items like sales per unit. I'm also talking about items like cost per unit. I'm also talking about sales trend over, salary and wages. I'm also talking about average salary per employee. Can you make a trend graph of all these items? And over a period of time, can you try to analyze how the company has progressed in their cost efficiency or they have progressed into the revenue growth? Guys, can you do this analysis that average salary per employee over the past 5 years have grown by 2% year on year basis or 3% year on year basis? So the very first technique that is given to you is the trend analysis, which is a commonly used technique which involves comparison of current data with prior period balance or with two or more prior periods. Are you understanding what you did? Trend analysis is a technique that is available to you, available to any auditor, which is a commonly used technique for all the P&L items or basically any item. For example, debtor turnover ratio, creditor turnover ratio. You want to calculate those ratios and then you want to see in past 5 years how that ratio has improved or how that item of financial statement have improved. Are you writing this, guys? So for trend analysis, it is a guys, can you please keep your cameras on? Ronan, are you back? For trend analysis, it is a commonly used technique. It is a commonly used technique, okay, which involves comparison of current data with prior period balances or with two or more prior periods. Please draw a quick chart over here. On the y-axis, please write number of employees, and on the x-axis, you write average salary per employee. Now, the next technique that is available to you is ratio analysis. What is ratio analysis? You take the revenue items, you take the cost item, you take the balance sheet items, you take the P&L items, or you try to see the interrelationship of those items. For example, you take the total debt and the total equity of the company and try to calculate a ratio which is named as debt equity ratio. So what does it show? For example, if you have a debt equity ratio of 2:1, Amrita, can you tell me what does it explain? If your debt is 2 rupees and you have equity of 1 rupees, what is the reference you make inference you make? That for every 1 rupee that you put
Every
from
that
your
is
pocket, you
yes,
take 2 rupees
two
loan
rupees
from the
for
bank
that.
to operate your business.
Yes,
Correct?
yes.
If you have inventory turnover ratio of 4 times, Pooja, what does it mean?
Yes, ma'am.
If you have a inventory turnover ratio of 4 times in a year, what does it mean?
That the turnover cycle is within a
For
year, that's
about
4
4
times.
times in a year, you are able to turn out the whole of inventory that is there at any point of time in your books, which is a good ratio. Like that much of inventory you are able to buy, produce, and sell in the same year 4 times. That is a huge turnover. Like shows a good position, right? Then gross profit ratio, if it is high, you understand, okay, entity is able to earn the business from earn money from its regular business, right? Solvency ratio. What the solvency ratio shows that in case of any crisis, the entity will not be shut. It will be solvent because it has enough money to repay its current assets, current liabilities, and all the debts, right? So ratio analysis, please write the ratio analysis. See, now this example you will remember, but you also have to write the ratio analysis. Ratio analysis involves analyzing revenues and cost, capital items forming part of balance sheet and P&L. Ratio can be compared over the over the pe- over a period of time or to the ratios of another entities within the industry. For example, for your client, you calculate the inventory turnover ratio, but then also you calculate the ratio of another companies in the industry, for which you can get the data from money control for any stock exchange website. And then you compare the ratio of your client with that other client. Make sense? Can we do the reasonableness test? Reasonableness test is another procedure that is applicable to you, technique that is given to you. How do you check the reasonableness of something, a financial number? Like for example, in normal terms, in audits, normal terms I'm talking about, you wanted to obtain an evidence about particular law, particular court case that is going on of your client, right? And you told your client that, see, I want to talk to your legal counsel to know more information about this case. Now your client says, no, 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 the court, let my lawyer handle the case. I don't want you to go there. Whatever information you want to ask, you ask from me only. So you are like, why? Why can't I talk to the legal? I just need 1 hour meeting. I just need 30 minutes meeting. I don't want any more information, right? So you went ahead and you spoke to, you went ahead and you told the client like this, and client is saying, no, I'm not allowing you. So whenever someone refuses you to to apply any procedure to obtain audit evidence, you have to first check the validity and the reasonableness of the reason they are giving. That whatever your client is saying, is it even reasonable? Right? So similarly, in their financial statement, if they are presenting any number, be it their sales number, be it their asset number, be it their any liabilities, be it any provision for obsolete inventory, be it any provision for bad debt, is it even reasonable? So that is why, unlike the trend analysis, this procedure does not rely on events of prior period. For reasonableness, you don't have to go to the prior period. It focuses on non-financial data of current period only. These tests are generally more applicable to income statements, such as reasonability of advance expenses versus the number of orders received. Wait. I think there is something wrong in that example. Huh? Just give me a moment. I'll change this example to something which is more logical. Reasonability of raw material consumption to production of output. For X number of output, you want to apply only ABC number of raw material. That is the norm. And you see whether the consumption is in the same ratio or not. Done with the reasonableness, guys? Now comes the structure modeling. What is structure modeling? Not very commonly used in the audit as such, but it is still a technique available. Structure modeling, mainly they do, for example, have you heard of a degree of a professional degree of actuaries? So actuaries mainly work with the insurance companies, or they do in their independent practice as well. Those people, they need a modeling tool in which they can actually use a lot of statistical data in order to model, or in order to, they use a lot of financial data or non-financial data of prior year, so that they can see the reasonableness. They can also produce, okay, how much provision you have to take. For example, if they for example, for actuaries, there is a model available. In that model, what they will do is, for example, they want to calculate the provision for pension plan. Now, for giving a pension to an employee, you don't know in how many years that person is actually going to leave, whether that person will actually, work with us till the age of 60 years. Right? So, in whatever years you have to pay the pension to that employee, how do you calculate that? It will vary on so many things. Now, the pension also varies on the latest basic salary paid to that employee. After 20 years, 30 years, I don't know what will be that the basic salary. But based on the company data, actuaries put all that information into that model and try to form a number of it, try to make a number out of it. And that is the example they have given of a linear regression. So what do people do when they use the structure modeling? They use a structure modeling tool like a statistical tool or model based on financial or non-financial data of prior accounting period to predict current account balances. Clear? So whenever they ask this question, they will ask as a single question. How do you do the trend analysis, the ratio analysis, reasonableness, or structure modeling? Or if they ask separate question, they will only be asking it for either for 2 marks of this, 2 marks of this. That's it. That is how they are normally asked this question. Are we clear, guys, on this part? Okay. Now, my question to you is, do you always apply analytical procedure at the beginning of the audit life cycle? So have I shown you that journey of an auditor, like have I shown you that something journey of an auditor, that image? Now remember, when you want to apply the audit, when you want to apply the analytical procedure, is there a given phase in your entire audit life cycle where you want to where you will apply the analytical procedure, or can you apply all analytical procedure throughout the audit? How do you do that? Throughout the audit, can you apply I'll ask this question again. Can you apply analytical procedure at planning of audit stage? You can. But the problem here is you don't have any data for current year at the, like you don't have the correct data for the current year. You just have got the draft financial statement. How will you apply analytical procedure on that at planning stage?
Prior period data?
You with the prior period data. You can obtain other
Just
relevant information and reports from the client, right? You may use the draft financial statement, that is not a problem, but also to get a more accurate trend and the data, you use the prior period financial statement, right? So there is a question that will be asked in your exam. Explain how a statutory auditor of a company can apply analytical procedure at the planning phase of the audit. You have this in your books, guys. It's a small topic itself, but it can be asked as a separate question. Audit procedures at planning phase of audit. Will you write the answer at least with me? Okay. Amrita, why do you look so worried? No, you're not. Everything is cool, no? Okay. So you have to apply analytical procedure at planning phase. Now, please write. I'll tell you why I'm writing like this. Actually, I used to use this PDF in a different software. Then I changed my software for writing the answers, making notes. But the thing is, when I imported the document as it is, it got like pasted and the my answers got embedded. So now I'm not able to rub this. So now I'll have to create altogether a different PDF from my original material. And that is why in some cases you will see the answers are written, in some cases there are no answers. Because normally when I take the writing practice batch, I'll just remove that before the class. I'll remove all the answers. Now I'm not able to do that, and I can't tell you like how much irritated I feel because of this situation. But it may be for some standards only, but I'll still write and dictate so that you can also write at the same time. Works? Okay. Explain how statutory auditor of a company can apply analytical procedure at a planning phase. So first point says use of analytical procedure at planning phase as per SA 520. That is your heading. In planning phase, analytical procedures assist the auditor in, now here comes your first key point. Have you started, guys? It will assist you in understanding the client, business, and in identifying areas of potential risk by indicating aspects of a development in entity's business of which auditor was previously unaware. Remember, I told you this wording in the beginning that it will give you some information of which you were previously unaware of. This is the line that I say expects you to write whenever you're writing essay 520 and the importance of analytical procedure. It will analytical procedure assist you in understanding the entities and the areas of potential risk by indicating certain aspects and of or the development in a client's business of which auditor was previously unaware of. But whenever you are done with the first para, please let me know. I'll take the next 2 points. Now, this information will assist the auditor in determining the nature, timing, and extent of other audit procedures. Now they have given the example also. Analytical procedure in planning phase uses both financial and non-financial data, such as number of employees, comma, square feet of selling space, and number of goods produced. Now, this is the example ICI has given for in case of like, you want to write your own set of example for analytical procedure, you can write anything. So you don't just be restricted to this. Now, whenever you apply analytical procedure, what will happen practically? Whenever you want to apply analytical procedure, you will always have some expectation. Like, for example, whenever you see a financial statement of a company and you want to calculate the current ratio, how do you calculate the current ratio? Give me the formula of current ratio.
Current asset by current liability.
So whenever you are doing current asset by current liability in your office, you will at least have some expectation about what result you should be getting. Based on your knowledge of client, based on the previous year financial statement, you will have certain expectation as to the what current ratio would be there. The thing is, when you applied that formula and the result that you got, it was far different than your expectation. So ICI uses the word of fluctuation to define the difference between expectation versus what the result you got from the analytical procedure. The point here is when you are applied analytical procedure and you got certain fluctuations than your expectation, are you expected to do the investigation of it? The answer is yes. Come to the next question. While performing analytical procedure on financial statement of ABC company, auditor identifies fluctuation and the relationship that are inconsistent with other relevant information and also differs from the expected values by a significant amount. The auditor seeks your advice as to how he shall proceed. Did you get this question? There is a topic in your books called as investigation of identified fluctuations. Do you all have it, guys? Please check in your books. Investigation of identified fluctuations.
Yes, ma'am.
Got it, Amrita? So whenever you identify a significant fluctuations or the fluctuation from what you got versus what you expected, you have to investigate it as an auditor. How do you investigate? You have only two procedures. One, you inquire management and obtain appropriate evidences as relevant to management response. I'll tell you what happened. You found a difference, you go and talk to management, why I see a different number than expected. Then management will give you some answer. Whenever management gives you some answer, you first evaluate the reasonableness of management's response. And whenever management says something, you see the reasonableness and you also obtain sufficient and appropriate audit evidence regarding whatever they said. And if you're not satisfied with that also, please perform other procedures as you may feel necessary. So this question will have only 2 points as an answer. Can you please write along with me? In investigation of identified fluctuation, you will write as per SA 520 analytical procedures, if statutory auditor identifies fluctuations or relationship that are inconsistent with other relevant information or that differs from expected values by a significant amount, the auditor shall investigate. How will you investigate, guys? First, you will do inquiry of management and obtain appropriate audit evidence relevant to management responses by taking into account auditors' understanding of entity and its environment and other and with other audit evidences. And that is not enough because you will need to perform other audit procedures as necessary. The need to perform other audit procedures may arise when management is unable to provide explanation or management's explanation is not adequate. Done? Whenever you perform analytical procedure, you will need certain data, right? In order to do the trend analysis, in order to do the ratio analysis, reasonability test, structure modeling, you will use certain data. Now, whenever you do the analytical procedure, you will use certain data. Before you apply any formula to that data, please ensure that data is reliable. Otherwise, your analytical procedure and their results will go for a toss if you get to know the data is not accurate. Question number 96. Pooja, can you please read this question?
Yes, ma'am. What are the factors that Once again, what are the factors that determine the extent of reliance that the auditor places on results of analytical procedure? Explain with reference to Essay 520 on analytical procedures. The reliability of data is influenced by its sources and nature and is dependent on the circumstances under which it is obtained. Accordingly, explain the factors that are relevant when determining whether data is reliable for purpose of designing substantive analytical procedures.
Right? So the reliability of data is influenced by its source and nature. It is dependent on the circumstances in which it is obtained. So source and data, to like two of the two answer point they have given in the question itself. You just need to know two more, right? So what is the first point? What are the factors? So there are only four factors that determine the reliability of data on which the analytical procedure are to be performed. First, sources of information available. Example, the information may be more reliable when it is obtained from independent sources outside the entity. Remember, in your essay 505 and your essay 500 also, they say the same thing. Whenever you obtain the information from the customer of your client or the creditor of your client, that is always if you get the bank balances from the bank, right, confirmation, that is always more reliable. So that is the sources of information available for analytical procedure. Then next is nature and relevance of information available. For example, whether budgets have been established as results to be expected rather than as goals to be achieved. What does it mean? For example, you see a difference in the sales. Then previous year versus current year sales have fluctuations. So you're like this is not going as per the trend. How come in the last 5 years the sales has grown to up to a certain limit, like 2%, 5%, 10%, 15%, 5%, like that, and suddenly there is a drop in the sales by approximately 50%. So you were like, no, this is not something as per the trend, like no. So you wanted to investigate that matter. Now, whenever you expect that matter, like you want to evaluate that matter, you just don't go and ask the client, what was your goal of achieving what was your goal of achieving a certain level of revenue in the organization? Don't just ask a goal of that. Ask that whether client, what budgeted sales have you taken of this year? So in your costing, do you look at the budgeted numbers? Why do you look at the budget number? For example, you do the standard costing. For standard costing, you have to refer the standard they have entity has said, and then you see the actual, and then you have to compare the difference between the standard and actual. So standards are like the budget is set by the entity, and whenever the entity makes a budget, there is always a sufficient data on which they make the budget. But whenever they decide a goal can be anything. So whenever you're comparing so always, whenever you do the analytical procedure, always see the information that you're taking, what is the nature of that information and whether it is relevant for you. So in the example, budgets are always more relevant than the goals that entity has set for them to achieve. Because for goals, it can be any ambition. Budgets are always on the basis of data. Then third, whenever you are taking a data for analytical procedure, please make sure that data is comparable. What does it mean? Industry data may need to be supplemented when entity produces specialized goods. You can't just compare every company just because the data is available to you in the market. Please see what goods your client produces. Suppose your client is giving any customized services or the goods. Like for example, you see Starbucks also selling the coffee, your client is also selling the coffee. But you started comparing the profitability of Starbucks and your client. Now the problem here is your client, the way your client produces the coffee, the whole idea of the production of the coffees and then the actually serving it to the client, then the whole brewing process and then the serving is to the customers along with the other food items, it is entirely different than what Starbucks does. Starbucks does the standardized thing. Your client does a specific customer requirement based coffee production, brewing and everything. Now, if there is a difference in the way they operate, how can you just compare their profitability as such? So at least try to make the data more relevant by making sure that the comparison is done between the apple and not apple between the oranges. So industry, you may need to play with the numbers a little bit. And last and the more important, whenever you take data from the client, please ensure when this data was prepared by the client or any sources, whether there were any controls over there or not. So you have to see the controls over preparation of the information. So you'll say controls are necessary to ensure that data is accurate, complete and valid. For example, controls over accounting entry of sales to ensure GST on goods does not get accumulated in sales value of P&L, right? Because your client doesn't know that the GST amount calculated on the sales value needs to go into the balance sheet item. They are doing the accounting of sales entry inclusive of the GST value. So these are the 4 factors you have to consider when you are looking at the reliability of the information produced. Yes? Question number 97. Amrita, will you be able to read?
It's not in the meet now.
Analytical procedure uses comparison and relationship to assess whether account balances and other data appear reasonable. Explain stating the purpose of analytical procedure with example. How do you do the comparison of any financial data? You can compare it with the prior period. You can compare it with the budgets, forecast. You can compare it with the similar industry information. But when you see the relationship, you see the relationship of different elements of the financial items. For example, you calculate gross profit divided by sales into 100 to calculate your GP ratio. So this is the relationship of profit you have established with the total sales. Or you see financial and non-financial information, such as you see the total salary divided by total number of employees to calculate the average salary per employee. So you had to explain how you can use comparison and relationship both along with the purpose of analytical procedure. Now, this is something you will have to remember. What is the purpose of analytical procedures? First, analytical procedure assist the auditor in planning the nature, timing, and extent of audit procedures to be applied. Then it acts as a substantive procedure when their use can be more effective than test of details. And last, it helps as an overall review of financial statement in the final review stage. Didn't I ask you this question in the beginning? When do you actually apply analytical procedure? It is throughout the process. So that is exactly, if you read this answer carefully, they talk about the entire purpose of analytical procedure. They talk about in the planning stage, it helps you determine the nature, time, and extent of audit procedures, further audit procedure. At a substantive stage, it will help you actually apply the analytical procedure more if you think it is more effective and efficient than the test of details. And it also helps you as an overall review of financial statement at the final review stage. Done, guys?
Yes, ma'am.
Will you be able to do this question? Explain the commonly used technique in comparison of current data with prior period and with a trend in 2 or more prior period balances.
Trend analysis.
Trend analysis they're talking about. When designing and performing substantive analytical procedure, either alone or in combination with test of details as substantive procedure in accordance with SA 330, the auditor shall determine the suitability of particular substantive analytical procedure for a given assertion. Do you have this question? When the particular assertion analytical procedure is suitable, particularly suitable for that substantive audit procedure as per SA 330, how many points are there?
4.
What is the first one?
Determine the suitability of substantive analytical procedures for a given assertion.
For a the first point itself they have given over here, right? Whether
Yes.
first you have to determine the suitability of a particular substantive analytical procedure for an given assertion. Then
Evaluate the reliability of data
evaluate the reliability of data
from which auditors'
expectation
of recorded amounts or ratios is developed.
Okay, what is the next one?
Determine an expectation of recorded amounts or ratios.
Recorded amount and ratios. Then
Determine the amount of difference of recorded amounts
with
from expected values, which is acceptable without investigation.
Correct, which is acceptable without investigation. Because if you will have to do the investigation, then you will go to that answer where you have to do the inquiry with the management, and second you have to apply the other procedure. So for example, if you don't want to go for the expectation for the investigation, so determine the threshold. No, up to what amount of differences you can go without the investigation, right? So first determine whether that for a particular assertion, whether that analytical procedure is suitable. And if you want to go ahead and do the analytical procedure, then first determine the reliability of the data from which the auditor's expectation of the recorded amount can be developed. Then you develop an expectation, and then you compare the differences between your expectation and the actual recorded amount. And whatever may be the differences, you first determine the threshold above which you will actually go for investigation, and below which you can just go ahead with the audit without the further investigation, right? This is a repeated question, suitability one. Okay. Tree Limited presented financial statement of 24-25 to auditor for expressing an opinion thereon. The auditor, while carrying out the audit, started comparing various items of P&L of the year with the previous financial year. What is auditor trying to achieve by carrying out these comparisons?
Is it the ratio analysis?
In ratio analysis, we don't.
It's the reasonableness test, I guess.
But the reasonableness test you normally don't do with the prior period, right? You check the current year item with the current year item only. So whenever you compare the figures with the previous year, is it you want to establish the trend only? No, then.
Okay.
Right. See, normally in the ratio analysis you use ratio analysis also you can. Okay, just a second. I'll see the keywords. How do you differentiate this? So the reasonableness test, see, if you see the definition of this one, in the reasonableness test, you said unlike the trend analysis, this procedure does not rely on the events of prior period. So it is absolutely not the reasonableness test, right? Because you only see the reasonableness of the current account balances, current period only. Ratio analysis involve analyzing revenue and cost items, and it can be compared over a period of time and to the ratios of the other entities within the industry, for example this. So
it is ratio analysis, right? Because they've said they would like to compare the items of profit and loss account in the question.
but then how, I don't know how they have done the drafting, but trend analysis also, drafting of the question I'm worried about. The trend analysis also involves the comparison of current data with the prior period balances or with the two or more prior periods. No. No. So you have to answer that with respect to trend analysis only. Otherwise, they would have used the wordings of the ratios, whether you want to compare the ratio with the prior periods or the other people within the entity. I'll just see how they have answered this, but I think this is how you can differentiate. Otherwise, it will be very difficult between these two. Chapter 4, is it right? Okay. So this is not to be this question is not to be answered in terms of identifying the technique of the analytical procedure. Rather, it needs to be answered in terms of that this auditor is trying to apply the analytical procedure in general. This is how they have answered. So, okay, shall we write this answer answer once? Analytical procedures as per SA 520 uses comparison and relationship to assess whether account balances or other data appear reasonable.
What is that, ma'am? Whether current balances,
No, whether account balances
account balance.
and other data appear reasonable. The auditor of Tree Limited would achieve the following by carrying out the comparison stated in the question. First, if balances included in the P&L.
So should we write the answer saying if we compare the balance current with the prior period, we would be finding the deficiencies?
Yes,
Would it be a general point?
it can be, yes.
Okay.
So if the balances included in the P&L of an entity are compared with those contained in P&L of prior period, it would be possible to find out the differences for increase or decrease in P&L. But at the same time, you can also use the ratios. Also, auditor can use certain ratios for items included in P&L and compare the same with ratios of previous years. It is possible to ascertain the extent of increase or decrease in various items of income and expenditure and its impact on overall profit of current period. I'll use the below space. If auditor identifies material differences he shall ascertain the reasons thereof and assess whether accounts have been manipulated to inflate or suppress the profits. Fourth, by applying analytical procedures, auditor can also identify the existence of unusual transactions, comma, amounts, comma, ratios, and trends that may have impact on audit procedures.
Done, ma'am.
Done. Okay. So tomorrow, no, when we start with this, we will first do few more questions of 520, right? Just to get a little bit more confidence into it, because they what the questions they are asking there, they want a very specific things to be written, but they are asking it like in a very generic manner. So it is very difficult to find out from which part of the standard, because also it is a big standard. So it will be difficult to just trace like from which topic they have asked this question. So at least we'll discuss more questions tomorrow 520, and then we will do 580, right? After that we'll do 580, and I think we will be able to do like these two properly after tomorrow, like tomorrow. And if we'll have certain time left, then we will start with essay 530. Done. Just remind me of this sequence tomorrow. First we'll see more questions of this, then we'll go to 580. I think we will need that 1 hour submit time for that, and then after that, for the remaining time, we can start 530. Done. All right. Thanks. See you tomorrow.
Thank you, ma'am.
Welcome. Bye.